All right, Assalamu alaikum and hello. My name is Zeeshan Hasan. I'm the tutor of FR F7. In this session, what we're gonna do, we're gonna practice the past paper from September December 21 exams. Uh, so here the scenario one, and the following is an extract from the trial balance of memes company for the year ended 31st December 2005. We have revenue of 24,300, cost of sales 11,600. Okay, I'm considering million into thousands here. Okay, admin expenses 10,900, distribution cost 7,300, income tax is 140, deferred tax liability 1st January 2005 7,700, provision at 1st January 2005 4,600, retained earnings at 1st January 2005 43,200, equity share capital at 1st January 2005 60,000, intangible assets 3,300, investment property 19,000, finance cost 1,400, investment income 500, and suspense account is given of 46,500. Okay. Now, the following information is relevant. These notes. Memes company noted there was an error in the inventory count at 31st December 2004, meaning that closing inventory balance in the 2004 financial statement was overstated by 0.7 million. No entries have yet been made to correct this error. Okay, the provision relates to the court case in existence since December 2004. Means company settled this case on 31st December 2005 for 6 million. The full amount was credited correctly to cash with the corresponding debit entry being made in suspense account. Okay, the income tax figure in the trial balance relates to the under or over provision from the previous year. The current year tax is estimated to be a tax refund of 1.2 million. In addition to this, the deferred tax liability at 31st December X5 is estimated to be 8.2 million. On 30th September X5, MIMS company made a 144 right issue. The excise price was 3.5 per share. The proceeds were correctly accounted for in cash. The corresponding credit entry being made in the suspense account. Okay. Memes company acquired an investment property for 20 million cash on 1st January X5 and decided to use a fair value model to account for investment properties as the property is expected to have a 20-year useful life. Depreciation was recorded in this basis. The fair value of the property at 31st December X5 has been assessed at 22 million, but no accounting has taken place in relation to this. All depreciation and amortization is charged on a pro rata basis to an admin expenses. There was no other acquisition or disposal of non-current assets. Okay. Um, Memes company incurred a number of expenses in relation to brands during the year and has capitalized the following costs as in intangible assets. 1.3 million cash was paid on 1st April X5 to promote one of its major brands, which is deemed to have an indefinite life. 22 million cash was paid on 1st October X5 to acquire a brand from one of its competitors. Memesco expect the brand to have a useful life of 5 years. Memesco intends to sell it after 5 years. At the point of sale, it is estimated that value of the brand will have increased, and so no amortization has been accounted for in the current year. MIMS company paid a dividend of 0.4 per share on all existing shares on 31st December X5, recording the dividend paid in admin expenses. Now, we have three requirements. Prepare the statement of profit or loss MIMS for the year ended 31st December X5. Prepare the statement of changes in equity for MIMS company for the year ended 31st December X5. And prepare the following extract from the statement of cash flows for the year ended 31st December X5. Cash flow from investing activities, cash flow from financing activities. 3 marks. Okay, so 12, 5, and 3 marks. Total 20 marks available for it. Um, let's jump to the uh, straight away first jump to the our question. And for that, what I did, I opened my Excel sheet. Okay. So what we need to do, firstly, we have to prepare statement of profit or loss for the year ended 31st December 2005. Okay, so revenue, how much was that? 24,300. Okay. Then we have cost of sales. Okay, in cost of sales, what we have to do, we had a cost of sales of 11,600. Remember, there was an error in the inventory in the first note we looked at over here, the point number one, there, which was saying that inventory was overstated by zero point 0.7 million. So what we will do, simply let us deduct 700 from it, and we'll get 10,900. Okay, since it's an cost of sales need to be negative, so now it's perfect. Okay, cost of sales. What will be our gross profit in this case? It's gonna be 24,300 minus 10,900, 13,400. Now, admin expenses. What was the admin expenses? They were 10,900. Plus, we have to recognize the provision of 1,400, which we read into the note. Okay, plus 1,300 relating to the promotion of brand, plus 100 of amortization, minus investment property depreciation, which was earlier on the cost model, minus the 3,000 of dividend. All were given in the notes, right? Uh, so just a second. 10,900 plus 1,400 plus 1,300 plus 100 of amortization, and it's sorry 1,000 of investment property and minus 3,000. So overall 9,700, and we have to take it off 9,700. Okay, then admin expenses done. Distribution cost, just taking it from the trial balance. No working required in it, 7,300. So I have to take it in negative. Just a second. So we will get loss from operations. Okay, so how we will get it is equal to sum this minus this, and we will add 7300. 3600 is our loss from operations. Okay, now next is finance cost, and which was given into the scenario 1400. Simply investment income 2000 plus 500, 2500. Okay, so the loss before taxation, the loss before taxation, right? It's gonna be loss before taxation 2500. Now we have to look at taxation, right? It's given 140 minus the current taxation given into the note 1200 plus the movement in deferred taxation. It's 550. So loss for the year will be sum minus 2500 minus 550. We have to add it into it, right? So it's gonna be minus 1940. I'm just punching it. Okay. Then statement of changes in equity we have made. Statement of changes in equity for the year ended 31st December 2005. Okay, so let's do it. What we have related to it share capital, share premium, and retain earnings. So balance at 1st January 2005. What's that? Share capital 60,000. No share premium at that day. 43,200 is the retainer. Now prior period error is the prior period error. Uh, zero here, zero here, and minus 700. Restated balance at 1st January 2000 x5. 60,000, 0, and 42,500. It's gonna be okay. Then share issue 15,000, 37,500. It's due to right issue. Okay, 0, profit for the year 0, 0, and 1940. Dividend paid that's gonna be 75,000 into 0.4. So sorry, 0.04. So just link it here. That's it. Uh, Now balance at 31st December 2005 is equal to sum. We'll get our balance 75,000 link 37,500 and is equal to sum. We'll get uh, it's need to be negative. Okay, so 37,560 because dividend is paid. Now our last requirement from this question. Extract from statement of cash flows for the year ended 31st December 2005 cash flow from operating activities. So purchase of brand minus 2000, purchase of investment property minus 20,000. So net cash used in investment properties, $22, right? And cash cash flow from financing activities, proceed from issue of share capital, 50 to 500. Okay. Dividends paid is equal to, you can link it like this, and simply anything else, no. So just total it 49,500. So we got our balances, right? Just for the presentation purposes, I'm just making these tables and we are done with this question, right? I hope we get this question, but we are not done yet. We will do another question in this session. Moving to the question. Now, moving to other question. Scenario 2. This scenario relates to four requirements. The Pindari Group operate in the fragrance and cosmetics industry on 1st January X7. Pinardi Company disposed of one of its subsidiaries, Silva Company, for cash of 42 million. Silva Company manufactures jewelry and was sold because the Pindari Group wanted to exit this particular sector. The extracts from the consolidated financial statement of the Pinardi Group for the year ended 31st December 2000 X and X7 are as follows. Okay. Revenue 98,300, 122, 400. Okay. Cost of sales 47,600, 71,800. Gross profit 50,700 and 50,600. Operating expenses 33,700 and 37,400. Profit from operations 17,000, 13,200. Finance cost 3,200 and 5,500. Profit before tax 13,800 and 7,700. Statement of financial position: inventory is 13,300 and 22,400. Cash 31,400 and 14,600. Non-current liabilities 42,000 and 61,000. So the accounting assistant has not accounted for Silver Company as a discounted operation because the disposal occurred on 1st January 2000 X7. No figures from Silver Company has been included in X7 financial statement except above. The proceeds from the disposal have been recorded in cash. With all net assets and disposals recognized, goodwill recognized, the balancing figure was held in suspense account. Pinardi Company acquired 100% of Silver Company on 1st January X1 and goodwill was calculated as 6 million. The goodwill had been impaired by 30% in 2000 X5. Okay, the net assets at 1st January X7 were 35 million. Okay, as part of the sales agreement, the Pinardi Group will receive an annual fee of 2 million for the use of the Silva Company brand. The X7 annual fee has been included in Pinardi Group revenue for the year ended 31st December X7. Results obtained from Silva Company individual financial statement showing the following key information: revenue 39,000 and 36,000, gross profit 18,800, 12,600. Profit from operations are 8,000 and 6,000. Prior to the disposal, Silver Company used to some property belonging to the Pinardi Group. Following the disposal, the Pinardi Group moved its cosmetic division into this property. Previously, the domestic cosmetic division had leased external facilities for 2.5 million a year. At 1st January at 7, the lease had a 10-year remaining to exit the lease. The Pinardi Group made a one-off payment 3 million to the lessor and recorded it as operating expenses. The Pinardi Group acquires new raw material from overseas in 2006. The group recorded foreign exchange gains of 3 million, and in X7 the group made a foreign exchange loss of 1 million. Both items were recognized within operating expenses. So we have to calculate the gain on disposal of Silver Company that would need to be included in the consolidated statement of profit or loss for the Pinardi Group for the year ended 31st December X7. 2 marks. Explain whether or not the disposal of Silver Company is likely to constitute a discontinued operation and the correct accounting treatment for this. 3 marks. And then we have to calculate the following ratios using the pre-formatted table for the Pinardi Group for the X7 and X6. Gross profit margin, operating profit margin, investor cover, and inventory turnover days. 4 marks. Analyze the performance and position. So we have to analyze the performance and position for the Pinardi Group for the year ended 31st December X7 and compared to the year ended 31st December X6, 11 marks. Good. Now, Pinardi Group. Okay. Pinardi Company. We have to compute the gain on disposal. So disposal proceeds 42,000 less net assets at disposal. That will be our working one. Okay, I'll show you how I compute it. All right, let me do the working over here first. Work. So goodwill at acquisition. It was only how much? 6,000 given in the question, right? And then less impairment. How much was that? Six. It's the 30% of the goodwill. And yeah, it's obviously need to be negative, so 1,800, and then unimpaired goodwill. At acquisition, so 4,200, right? Now less net assets at disposal were given in the question 35,000, and then less goodwill at disposal is equal to minus 4,200. Gain on disposal, how much? Is equal to Gain on disposal is equal to sum. Okay, we have to deduct it as well. So 2800, right? Now, next requirement is related to explanation of silver company disposal. I'm typing it here. Explanation of silver company disposal. B part. So what we'll say, silver company is likely to meet the criteria as it is a separate major line of operations which has been disposed of during the year. Okay, as a discontinued operation, the results would be removed and presented separately on the face of statement of on the face of statement of profit or loss together with the gain on disposal of 2.8 million. Okay, as silver company was sold on 1st January 2007, there are no results to incorporate for the current year. However, the results of 2006 should be shown as a discontinued operation for comparative purposes. So far, so good. Next one is we have next requirement of ratios calculation. Okay. In ratios, what we have to compute, let's gross profit margin, uh, operating profit margin, interest cover, and inventory turnover days for how many days? For 2 years, 2007 and 2006. So gross profit. Oh, sorry. Let me type it over there. Sorry for this. 2007 and 2006. Gross profit margin. So what was that? 50,000 700 gross profit divided by the sales, which was 98,300, and multiplied by 100, we will get our gross profit margin, which is 51.57661. Okay, then for 2000x6, it was 50,600 with gross profit divided by the revenue, which was 122,400, multiplied by 100. Okay, sorry, I forgot the is equal to. So what we got, 41.33987. Cool. Next one, operating profit. 17,000 was the operating profit for the X7 divided by the 98,300 the revenue and multiplied by 100%. 17.294 is equal to 13,200 divided by 122,400 multiplied by 100%. What we will get, 10.78%. Interest cover, interest cover. PBIT divided by the interest. So what was our PBIT? 17,000 for X7 divided by interest was 3,200. So we will get 5.3125 times. Okay, let me mention over here times. And in this year, it was 13,200 divided by 5,500. Okay, how much we will get? 2.4 times. Okay, wow, it's getting bad, by the way. Now, last one is remaining. Inventory turnover days. Inventory was 13,300 divided by 47,600 multiplied by 365, 101.9853 days. That means 102 days, by the way. Okay. And finally, is equal to 22,400. The inventory divided by cost of sales, which was 71,800, multiplied by 365 days. How much we will get? 139. Uh, sorry. Oh, sorry. It was an error. 113.87. That means 114 days. Okay. We are done with the ratios calculation. Now we have to do the analysis, right? So for it, what I will do, I'm opening my Word file to write the answer for it, the final part. So what we'll say over here, D part, the analysis. What we'll say for that, the overall revenue is down by 24 million, which may be largely due to the disposal of silver company, which is in the 2000x6 results, but contributed no revenue in 2000x7. Okay, last year Silva company contributed 36 million in revenue. Removing this from the 2000 X6 results shows that there has been a like for like increase of 122.4 million minus 36 million. What will get 11.9 million from the fragrance and from the fragrance sorry and cosmetic division. Uh, the gross profit margin is up significantly from 2000 X6 to X7 from 41 to 52%. Okay, 52%. We can see that the gross profit margin of Silva company in 2000 X6 was only how much? 35%. Okay, that is how we get 12.6 million divided by 36 million. So the other parts of the group were also able to generate also available to generate higher gross profit margin historically. Okay, the operating margin has increased, although not quite as dramatically as the increase in profit margin. In fact, operating profits have also decreased by operating expenses have only decreased by 3.7 million despite the 24.1 million decrease in revenue. There are some factors to consider. within the operating expenses for 2007, there is one of exit fee. So there is one of exit fee of 3 million for cosmetics division, for cosmetic division, okay, to exit the lease. While this is expensive, the division would have been paying $25 million over 10 years, so will ultimately save a significant amount of money. In addition to this, the effects of foreign exchange gains and losses are included in the operating expenses line in 2006. There was a gain of 3 million, but in 2007 there was a loss of 1 million, which will have reduced operating profit. This shows that Pinardi Group have quite large exposure to foreign currency risk. The interest cover has increased from 2.4 to 5.3 during the year, which is a combination of both. An increase in operating profits and a decrease in finance costs. The finance costs are likely to have decreased due to exit from the lease. Now, we will discuss about the position of the company. The decrease in non-current liabilities is likely to be partly due to the removal of the lease liability for the cosmetic division, which had 10 years remaining. Some of the non-current liabilities is likely to be may also have been paid off from the proceeds from the sale of Silver Company. Silver Company was sold for $42 million, but cash has only increased by around 17 million. Therefore, the Pinardi Group may have used some of the cash to reduce the non-current liabilities in the group. So it is worth noting that in 2006, the assets and liabilities would have included Silver Company figures. It may have been that Silver Company had significant non-current liabilities which were removed when it was sold. Finally, I will give my conclusion. Right, and in conclusion, what would I say? What would I say that while Silver Company does generate profit, the disposal seems to have been a good move. Silver Company's results have actually improved since disposal, showing it is not a struggling business. Additional focus on the remaining divisions has generated more profits for the year for the Pinardi Group. Okay, for the Pinardi Group, Particularly now, the cosmetics division is utilizing the group property and no longer requiring lease premises. Right. So that's it. Uh, Simply, you have seen my whole mechanism how to analyze on the ratios performance. First you have to compute the calculate the ratios. Okay, after that what you have to do, first you have to tell that either the particular ratio is improving or it get deteriorating. Then you have to tell the reason. And it's not just like that, you have to tell the reason by looking at to the scenario, connected to the scenario. After connecting to the scenario, then tell your rational logical reason that why it's happening. Okay, for each ratio you compute it, you have to give your analysis. If you don't, you won't get the full marks. Okay, and finally, after that, based on whole analysis, you have to give your conclusion like I did. There is no rocket science in it. Okay, further, I hope this session is helpful for you. And further, if you have any questions, you can contact me. My name is, as you know, my name is Zeeshan Hasan, and my contact number is +92. If from Pakistan, use 03341777706. Okay, and our website is accountancy.com. You can purchase my courses for your future exams preparation. So that's it for now. See you.